Best people to teach you investing nowadays. People often consider when the best time is to start investing in order to generate profit and build one's wealth. And despite hesitation or outright lack of action, many experts will say that the best time to start investing is right now. Taking the plunge and investing your money can be risky and even frightening. But with the proper knowledge and guidance, you can navigate through the market to understand it better and choose the better options. It's a good thing there's a number of financial gurus you can learn from to follow their lead. Here are the best people to teach you investing nowadays. This is Best of Tens. Hit that like button, subscribe, ring the notification bell, and share this video. Number 10, Ben Stein.
Tariffs may sound boring, but they're not boring. They're scary.
Ben Stein is a famous writer, lawyer, actor, comedian, and commentator who began his career as a speechwriter for Presidents Nixon and Ford before becoming an entertainer in Hollywood. The host of Comedy Central's Win Ben Stein's Money, he is also a former economist and law professor. He's been seen as a guest in numerous financial news shows, providing key advice and opinions on how to build and maintain wealth. And he has spoken out on how smart money should be focused on trying to buy and not sell as much distressed merchandise and mortgages during the late 2000s recession in the United States. He has also expressed his opinions numerous times on how the United States Internal Revenue Code has been too lenient on the rich and urged the government not to extend further tax cuts for the wealthy. Number 9, Charles Ponzi. You've probably heard his name due to the reputation of an application that is quite notorious in the market. Charles Ponzi didn't quite invent the pyramid scheme, but his business model version was so brash that all scams of a similar nature were branded as Ponzi schemes. Charles Ponzi was an Italian who transferred and operated in the United States and in Canada, who became, in the early 20th century, known as a swindler or con artist. In 1920, he started a company he called the Securities Exchange Company and promoted a money-making scheme that promised clients a 50% profit within 45 days, or 100% profit within 90 days by buying discounted postal reply coupons from other countries. This attracted plenty of investors who saw the opportunity of quick and huge returns on their money. However, instead of investing the money he received, Ponzi just redistributed the funds and pocketed a significant portion for himself. New investors deposited funds into Ponzi's scheme, with the cash flow only providing returns for as long as new investments kept coming in. While Ponzi's actions were criminal, his concept actually makes sense if executed properly, providing opportunity of wealth through public investment. Number 8, Jim Cramer.
As traders react to tight oil and gas supplies while they attempt to hedge against inflation.
Best known for being the TV host on his CNBC program Mad Money, Jim Cramer runs the CNBC Investing Club and has been helping people for years, providing advice on how to own stock and build wealth. His show is famous for being loud and fast-paced, while offering options for stock picks to choose from. He also had his own website, TheStreet.com, which provided Wall Street-related news, commentary, and advice. He's also written several books on how to get rich carefully, and he continues to provide knowledge through his several platforms. Number 7. Carl Icahn.
I think that we have a major trouble in this country, because I think many too many of our companies are badly run.
An activist investor and modern-day corporate raider, Carl Icahn buys large stakes in companies and attempts to get voting rights to increase shareholder value. He has holdings which include shares at Time Warner, Yahoo, Clorox, and Blockbuster Video. He is known for providing financial advice, particularly with his biggest rule, which is don't take anything personally. When it comes to business, Icahn recommends trusting in your own exhaustive research based on facts and not on opinions obtained even from the most trusted sources. While advice from friends and colleagues can be considered and verified, it shouldn't be the sole reason why you would commit to handing over hordes of money. Number 6. Prince Al-Walid bin Talal.
Or this Kingdom Holding, or the Al-Walid Philanthropies, or my private office, or Rotana.
One of the richest people on the planet, Prince Al-Walid bin Talal is also quite famous in the investing world. Based from Saudi Arabia, the prince founded the Kingdom Holding Company, which would later make a major bet on Citigroup's predecessor, Citicorp, back in the early 90s, and would become the bank's largest shareholder. He has also made significant investments in Twitter and Snapchat. Prince Al-Walid's keen advice when it comes to investments is that having patience is key. This was tested during the Great Recession when many of his investments took a blow. But instead of selling out, he held his investments with his strong convictions to ride out the period, and he emerged victorious. Number 5. Dave Ramsey. Dave Ramsey is a personal finance personality, radio host, and businessman who hosts the syndicated radio program The Ramsey Show. He has 6 best-selling books and also has a website, RamseySolutions.com, which provides keen insight on finance and investments. Through his platforms, Ramsey shares stories and offers advice for people on how to deal with their financial problems by talking them through the solutions. Number 4. Peter Lynch.
What would you do when it went to 7? This is the problem that people have, is they sell stocks because they didn't know why they bought it. Then
American investor, mutual fund manager, and philanthropist, Peter Lynch was the manager of the Magellan Fund and Fidelity Investments from 1977 to 1990, which consistently made an average of 29.2% annual returns, making it the best performing mutual fund in the world during his tenure. Lynch is known as the proponent of value investing and has written and co-authored a number of best-selling books and papers on investment strategies. A legend in the financial sector, Lynch is one who promotes small investors, believing them to be capable of doing better in the stock market than large asset managers. Number 3. Robert Kiyosaki. One of the most influential authors who have catapulted the vision in finance for so many people. Robert Kiyosaki is the author of the best-selling Rich Dad, Poor Dad book series. He also conducts personal finance and real estate seminars, which are franchised through his Rich Dad company. Kiyosaki's main philosophy is to create passive streams of investment income and allow those to grow until they can support you without having to work until the end. This has been so well received that Kiyosaki's bestseller has been translated into more than 40 languages and has sold more than 32 million copies. Number 2. Benjamin Graham.
To why they are not more dependable is a very good one and interesting one. And my own explanation for that is this: that everybody in Wall Street is so smart.
The father of value investing, American economist Benjamin Graham wrote the 2 founding texts in neoclassical investing, and he has shone the light on identifying and buying undervalued stocks, which have the potential to grow over time to build wealth. Graham's approach to calculating a company's intrinsic value doesn't rely on trends and hot ideas, but rather focusing on diligent research, financial analysis, and patience. These concepts serve very well today, even as it was revolutionary when it was introduced by Graham in the 1930s. Many of the most notable investors in the 20th and early 21st century all proclaim to be inspired from Graham's principles, which make it a must-learn for today's asset managers and stock traders. Number 1. Warren Buffett. Widely considered as one of the most successful investors in modern history, Warren Buffett is a business magnate who is the world's 6th wealthiest person with a net worth of over $116 billion. He has held the financial ear of numerous U.S. presidents and several world leaders. And when Buffett talks, world markets move. As a prolific teacher, his annual letters to investors in his company, Berkshire Hathaway, is studied in college finance classes in the most prestigious universities around the world. Buffett himself attests to following in Benjamin Graham's principles of value investing. When it comes to providing investment advice, Buffett believes that before investing in a company, you should do proper diligence towards the company's quality and then consider its price. He urges investors to look into financial statements, study conference calls, and even vet their management in order to make the right decisions, to have the confidence before making any buys, instead of simply investing because the price is low. So what do you think about these highly successful people? Some of them are legendary with the vast fortunes they earned. Which of these brains would you like to pick? Let us know in the comments below. This has been another informative presentation from Best of Tens. After you've left your comment, hit that like button, subscribe, and share the wealth by sharing this video.